Holy smokers, folks, this ain't no dang jokers. We have a lot to get into in today's video. So many stocks to talk about, so many things to talk about in regards to the market. I think I'm going to probably talk about 10 to 20 stocks alone in this video. It's going to be action-packed. Hope you enjoyed as always. Thanks so much for being here. Appreciate each and every one of you guys. I want to start out here talking about AMC, not a stock we talk about very often on the channel, but this is a stock that moved down 14.5% today, okay? AMC matters to the stock market more than I think a lot of folks kind of realize, okay? And the reason AMC matters is because this was the last hurrah of that, what was seen as kind of a speculative bubble that was going on. This was the last hurrah. And this, when AMC peaked, it was around like summer of 2021. Now, most of the speculative stocks in that retail crowd, those stocks actually peaked in February or January of 2021. So AMC and that whole movement was kind of like the last hurrah, okay? And the deterioration of that stock is something a lot of folks have actually looked at and been like, this market hasn't bottomed until we get this thing absolutely decimated, essentially. And boy, has it been decimated. And the amount of margin calls that are likely created in this situation is pretty immense. Remember, AMC was the focus of the retail community for a good amount of time. This was everything everybody talked about on Wall Street Bets. It was the thing for a long time there, right? And, you know, today it hit, you know, basically a new 52-week low, and, you know, it's approaching that $5 level, which the last time AMC was interesting as a stock was really back at the $5 level. And it's just been absolutely collapsed, and that's what's going on. And it also affects everything else that is one of those like retail related stocks. And there's so many of those stocks that were obviously popular, but nothing was, you couldn't hold a candle to anything compared to what was going on inside that AMC movement, okay? And, you know, you're just seeing all this stuff play out, right? This was posted by, I guess, Logan Paul. He bought an NFT for $623,000, and that NFT is now worth $10. So, you know, when you see these things happening, it's kind of crazy because, like, who cares about AMC stock? Who cares about Logan Paul lost all his money on an NFT? But honestly, a lot of people want to see this destruction, and until they see this sort of destruction, they feel like we haven't really bottomed in the market when you still have things just being very speculative in nature. From my outlook on this, personally, everything that is speculative has been absolutely killed, okay? It doesn't mean it can't get killed more. It doesn't mean Logan Paul's NFT can't be worth $5, you know, a few weeks from now, or AMC can't be worth $4 or something like that. But in terms of the destruction in basically every single crypto, every single NFT, every single speculative money-losing growth stock or anything that was in that space, it's all been absolutely obliterated by this point in time in this stage of the cycle. And I think that's an important stage because that's what a lot of market participants are looking for, that sort of destruction, okay? Now, next up here, let's talk about the state of the market, okay? The Nasdaq's now down about 33% roughly off of its all-time high. It is still not back to the June low, which was, I believe, June 16th, but it's getting very, very close in regards to the Qs and the Nasdaq, okay? The Russell's down about 33% as well. It's very close. I mean, extremely close to that June bottom now at this point in time. Like, literally, if tomorrow's just a decent down day for the market, the Nasdaq and the Russell will be at basically fresh lows, which will be, you know, kind of crazy because it will mean they broke through their June bottom, essentially. The S&P 500 is very, very close, and actually the Dow just broke through that literally a couple trading days ago, essentially. So, yeah, that's where we're at with the market. It's ugly times ugly, and basically all that destruction has come in 2022. That's the craziest part, is almost all this entire destruction has come this year. In a fairly short amount of time, to be quite frank, okay? Now, in general, if you want to know kind of where we're at with the market in general, right? This is S&P 500. So, usually when you're in one of these massive declines, the average is the market goes down about 33%, okay? And it lasts about 367 days. So think about it like this. Right now, the S&P 500 is about 7 percentage points, 7 or 8 percentage points away from that number. And we're probably 200 and, gosh, I don't know, maybe 270 days into this crash, something like that, roughly. It could be a little more, a little less. So we're approaching kind of where, you know, the average is. No, the big question is this going to be worse than the average, not worse than the average? I think that remains to be seen. A lot of that's going to come down to what happens with companies' earnings over the next couple quarters. If we don't see massive deterioration in companies' revenues and EPS, you know, you're not going to have a lot to go off of there, to be quite frank, over the next couple quarters there. So that's the whole situation. Obviously, the tech bubble was its own situation, and that boosted up all the numbers to make it look even worse, right? If the great financial crisis, that was obviously extremely serious matter, where the S&P 500 dropped well over 50% at the lows and lasted over 500 days. Very, very vicious. And yeah, I mean, if you're going to tell me this is great financial crisis 2.0, which once again, it's a big debate, but yeah, you know, you can obviously see something like that happening in that sort of scenario. It would be ugly, right? Now, for folks that are looking on the brighter side and want to hear a little optimism, why don't you have a look at this in front of you, because this is very, very important, okay? So what this looks at is, on average, since 1946, how the S&P 500 does in election cycles, okay? And the important one to look at is this blue one, which is midterm years. And what you see consistently is the market bottoms on average right at the beginning of October, and then it goes on a run, okay? And a very nice run. Now, obviously, each year is its own year, so we'll see if that transpires, right? But if this lines up, basically the next week will be very bad for the market, and then starting in about a week, 2 weeks, we'll start to see a nice uptrend. We'll see what happens. I wouldn't get your hopes up too much either way, whether you're hoping for an uptrend or not an uptrend. You know, it's just something that's interesting, right? That's the average and kind of what happens there. And just remember that. I think it's important to just kind of show you guys what that whole situation is. Now, this is a funny meme I was sent. This is hilarious because it's true. You know, stocks and crypto have been killed. And now next up, the Grim Reaper is coming for real estate, and we've obviously started to see some softness there. It's going to get so much worse, man, in real estate. Look at this. 30-year fixed mortgage rate today was around 6.9% almost. Oh, my gosh, okay? I mean, I don't know how anybody could be bullish on real estate anytime soon, to be quite frank. This is getting so out of hand. I think what's going to potentially transpire, there's a insane amount of homes being built right now that are supposed to take delivery in Q4, Q1 of 2023, and Q2 of 2023. I'm looking at these mortgage rates continue to skyrocket, and I'm like, I think there's going to be some people starting to walk away from these homes that are being built, just to be quite honest, because either they can't afford it or it just doesn't make financial sense to be at some of these rates that are expected. Because, I mean, this completely changes the payment situation. If you win, you know, people ordered these homes back at Q3 of 2021, Q4 of 2021, or Q1 of 2022. The 30-year at that time was like 2.8, 2.9, 3, maybe 3.1. Now you're talking about getting up close to 7%. It's a whole different dynamic. And where does it stop? Mortgage rates have been just going up. Like, where does it stop? Does it stop at around 7%, or do we go to 8% on a 30-year mortgage? You know, regardless, it's a disastrous situation when you know, everybody's used to 2, 3, 4% maybe. And now all of a sudden you have that situation. It's ugly, man. It's ugly times ugly for real estate. It's going to get worse before it gets better. Some of that's reflected in the housing stocks here today. Almost all these stocks are at 52-week lows or very close to 52-week lows now at this point in time. And, you know, but I will say, I think at some point in 2023, I don't know exactly when, but I think at some point in 2023, Rocket could get interesting. That's down to a $6 stock now at this point in time. But when it comes to Rocket, here's kind of my view on this, okay? You know, these folks that are getting these mortgages at, you know, 5, 6, 7%, if the economy deteriorates and rates start dropping, right, people are going to refinance like crazy. And we could go through a cycle where people don't just refinance once, but they could end up potentially refinancing twice or 3 times as rates continue to drop, right? So imagine you locked in at, I don't know, let's say 6.87% like today, right? And all of a sudden rates drop to 5%. Well, shoot, you're going to probably refinance, right? And then what if 6 months later, a year later, rates drop to 3%? Well, you're probably going to refinance again, right? And so a company like Rocket could obviously benefit in a major way for that. So it's not a stock I'm interested in this year, but at some point in 2023, I think it could be actually an interesting play for like a multi-year kind of cycle there. Never mind, you keep knocking down real estate prices in general, right? Okay, now we're essentially talking if you can continue to knock down real estate prices, and then let's say people get back out in the buyer's market at the end of 2023, maybe into early 2024, because home values have dropped a lot. And by that time, let's say mortgage rates are much more in normal ranges than kind of, at least if you look at the last 20 years or so, 20, 30 years, than where they've been at recently, okay? So I think that's something to factor in there. Banking, almost every single one of these banking stocks hit a 52-week low today or is very close to its 52-week low. Basically, every single one of these stocks. It just continued to break through new low after new low. JP Morgan is back to, similar stock price to where it was in the December 2018 crash now at this point. It's insane, okay? Ally just continues to go down. SoFi just continues to go down. Almost all those banking-related plays, they can't find bottoms anywhere at this point in time. It's interesting because I listened to the latest JP Morgan conference and the latest Goldman Sachs conference, and I walked away not being that bearish from it. Let's just put it that way, based upon kind of what their executives are talking about actually going on in their businesses. But those stocks are just being, no one wants a piece of anything banking related. And obviously people don't want a piece of like any stock right now, but especially none of these banks. And a lot of these are all very profitable companies, have good dividend yields. They're basically backed by the Fed at the end of the day, right? That's just the honest truth in this whole situation. They can, they got the Fed's backing. So it's a whole different dynamic than like the 2007 situation. Even if they got in any trouble, the Fed's there to bail them out like this, okay? I'm panicking. All my investments are red and we're already at 52-week lows. We're at 52-week low so far, okay? It's a 52-week low so far. And you know what stock comes to mind when I think about that? Good old Meta. When does the pain end for Meta? I mean, it seems like every day that stock hits a new 52-week low and new 52-week low. And it's like, how? Who is still selling Meta at this point in time? Like, you got to be flipping my flapjacks, man. This stock is down about 60% year to date for Meta, man. Meta, you got to be kidding me. But it just can't get out of its own way. There's just no buyers and the selling pressure is just relentless, right? Speaking about selling pressure relentless, the Chef, right? I think this one gets grouped into that whole kind of AMC wave, just on a much, much lower level. And, AMC down 14.5%, which pulls down the Chef as well. $4.99, that's the same price as a bull at the dang Target now at this point in time. Holy smokes, this ain't no joke. A lot of times people want to know my opinion, and, there's no news around the Chef. It's just like the stock price is going wherever the market wants to take it in the short term. The company doesn't hold their own fate at all at the short term. Over the long term, absolutely they do. Over the next 4 quarters, they've got to show improving margins, got to show improving cash flows in a substantial way, and profitability. If they do that, that stock price will fly. If they don't, it's going to be stuck at trash prices until they improve those things. That's just a bottom line in that whole situation. So they've got to show major improvements as far as the business. And if they do, the business will be rewarded. The stock price will be rewarded. If they don't, it's as simple as this. It'll be stuck at crap prices for, a while, all in these sorts of ranges, right? But in the short term, like over the next few weeks, the next month, it's 100% dependent upon where the market takes it. Market's up and it's green, it'll take the Chef there. Market's red, it's going to take the Chef down. That's as simple as that when it comes to that stock, okay? Shopify stock has been killed. I mean, it's down 83+% since November. 83+%. And Shopify is such a great company for the long term. Such a great company. But no one has any sort of long-term outlook in this market. And really what I'm talking about is Wall Street players. I think a lot of retail folks can see past tomorrow and can see past 6 months from now. But Wall Street can't. And they're just throwing all these stocks out. And I'm like, Shopify is a legit great company for the long term. It's going to be a multi-$100 billion market cap. And, the stock just continues to get hammered day after day after day after day to pretty much new 52-week lows and the lowest prices the stock has been in many, many years. And it reminds me very similar to what happened in Amazon back in the day. I think Shopify is a much more developed company, and much more of a, I would say, on the right trajectory than Amazon was in the tech bubble, essentially. But, if you look at what happened with Amazon, the tech bubble, guess what? Amazon fell 80-90% in the tech bubble, right? And it bottomed way before the market bottom, which is, I think, definitely a situation that could play out in Shopify where that stock will start going up way before the market actually bottoms. I think that's what will end up playing out there. But yeah, it's just interesting to see kind of how those situations play out. And people just sometimes just are very, very short-term in nature. And like I said, it's not retail that's really that short-term in nature. It's usually, I think retail's being hurt by margin calls right now in call options. I think I think there's definitely a good amount of margin that was out there on the retail side, which I can't wait to see the next margin numbers, that will come out in 2 months. I think if we were to see updated margin today, I think we're at the lowest levels we've been in probably 5 years, to be quite frank. But I think margin calls are killing retail right now. I think call options are destroying, because you got to understand, if a stock is down, if it's an out of the money call option, which is obviously a lot of the times what retail likes to play, out of the money call options. If a stock price moves down 2% for your out of the money call, that could mean your stock's down anywhere, or your option loses anywhere between 4 to 8% of its value, just like a 2% move on something that's out of the money, essentially. Now, if you talk about a 10% move, then your call option likely just probably lost 20 to 40% of its value in a day. So I just think that's really hurting retail right now. But in terms of Wall Street, these folks they don't have any sort of long-term vision. They're so focused on the next 6 months and just negativity, and I mean, it's getting, I don't know where it stops in terms of the negativity in the market, but I mean, a 3-year recession, it's going to be a lost decade, right? Don't buy the dip. I mean, at this point in time, it's like, how much more bearish can you get? What are we going to talk about? The next 100 years are going to be lost? Never buy the dip. Like at this point in time, it's just gotten so negative out there from Wall Street side. It's incredible, right? No, Apple's been tripping up a lot of folks, okay? And I was speaking with a friend about this, right? Because we're like, can Apple just go down a bunch so we can bottom out this market, right? But here's the thing, okay? Does Apple really deserve to go down a lot? And I think it's a fair question, right? And I've put some more thought into this. And the more I put thought into this, the more I'm like, I don't know if Apple really deserves to go down in any meaningful way. Doesn't mean it can't, and this sort of market could push any stock down. But the more I was looking at this, right? Apple trades at a P/E ratio of 24, 25, right? Here's the thing. If you look at the other stocks there in the $1 trillion boys club, Amazon trades at 106 P/E ratio, okay? Wow. Microsoft trades at a 24, roughly right in line with Apple, and Google McDougal, which is going through a whole host of problems, including government looking in there, and we'll see what happens with that whole situation. So that's going to probably trade at a discount to the other big dogs for quite some time. But Google McDougal's trading at 18.6, okay? And so my outlook on this is, why does Microsoft deserve to trade at a richer P/E ratio than Apple, right? Because Apple used to just be a hardware story, but it's not anymore. Now it's a services story. Now it's an ad model story. It's branched its business out in such a meaningful way at this point in time, right? Here's the way I look at this. Apple has roughly 1 billion people, if not, more than 1 billion people that use their devices, okay? In my opinion, hundreds of millions of people are going to go on one of these Apple One plans over the next 2 to 3 years, okay? So which means Apple's going to be making this recurring revenue off of most of their users, $14.95 a month, $20 a month or $30 a month. That's just going to be recurring month after month after month. And I think there's going to be hundreds of millions of people signed up for this very darn soon. And so when I look at it from that context, it's very much becoming a recurring revenue business model, similar to like business models like SaaS companies, similar to business models like a Microsoft, right? And if it's turning more into that sort of business, and then obviously selling ads, because their ad business has been taking off, and that's obviously hurt Meta and hurt Google and companies like that. But if you look at it from that context, it's like, man, this is going to deserve to trade permanently at honestly a P/E ratio of somewhere in the mid-20s. If not high 20s into the low 30s. Think about it like this for a moment, right? Costco is one of the best run companies in the world. Apple's one of the best run companies in the world, right? Costco, retailer, trades at a P/E ratio of about 38. Does Costco deserve to trade at a P/E ratio that is substantially above Apple? I don't think so, to be quite honest. I think both companies are incredible. I think they both do great work. I think they got great management teams, great business models. But I can't really say that. And so for me, from that context, I'm like, yeah, I mean, sure, Apple can go down, but I'm also hearing that that iPhone 14 is outselling iPhone 13. And this isn't even like the big model iPhone. Next year is supposed to be the big model iPhone, because this is like kind of the third year of the same generation. So think about it from that context. It's supposedly selling better, so their hardware business is likely still doing well, which is hard to even fathom how that could be doing even better. And then you're talking about this recurring revenue stream, every month that money just funnel in. I mean, shoot, from that standpoint, it's it's challenging to expect that stock to go down in a meaningful way. And like I said, in this sort of market, everything's possible, but it just gets a little challenging here, okay? Wynn Resorts. So not sure how many people saw the move in Wynn Resorts today, but on a bad day in the market, Wynn made a very nice move of 12%. Wynn's a stock I own in my dividends account, okay? And basically what happened here is it's announced that Macau is likely opening up for real again to Chinese tourists, okay? Now, with that being said, don't get too excited, because when it comes to China and their government, you know, one minute they're opening things back up, next minute they're like, oh, we're closing back down. So it's exciting. It's a positive step in the right direction, but you can't get too excited when it comes to Chinese government, because the next thing you know, they change up their plans and all of a sudden it's like, oh yeah, no, we're closing back down again, okay? But this would be huge for obviously Wynn's business, because their Las Vegas business has been tearing it up. It's been pretty much the best it's ever been in terms of the history of their business. But they have 3 properties in Macau. They have their 2 traditional properties that are in kind of the older part of Macau, and then they have their beast, Wynn Palace, which is on the Cotai Strip. And those properties have been bleeding money since Rona started, essentially. And if things actually open up for real again, you know, those properties are cash flow machines. But we'll see what happens with that. Don't get too excited. But here's the deal with Wynn historically. Anytime you get this stock between $50 and $70, it's usually a nice buy, and usually you get nice gains in a pretty darn quick amount of time, to be quite honest. Now, maybe this is the one situation that's different, but just this has happened many times. You had, you know, before this happened, it was kind of like, you know, the economy was recovering, and then it made this massive move up. And you got to buy Wynn, you know, for $40, $50, $60, $70 a share back in those early years, okay? And then it went on a massive run to $200+ a share. Then all of a sudden, the Chinese government was cracking down on everything. So next thing you know, stock is in the $50 to $70 range, right? Very quickly, the stock makes a massive move up. Chinese government relaxes a little bit. When Palace opens, everything's great, right? Then Chinese government steps back in again. Then Rona happens, right? But you see, every time it hits kind of the $50 to $70 range, it recovers, and it recovers pretty darn quickly. So we'll see what happens there with Wynn. Step in the right direction. Can't get too excited, because China's government just can't be trusted, okay? As for me today, I was out there buying stocks. Nothing changes with me. You know, if I see stocks at good prices, I'm going to buy. Today, I didn't go too crazy out there. I only bought 3 stocks. Recently, I've been having a lot of days where I'll buy 5 to 7 stocks. But yeah, today I just did 3 buys, and that's about it in regards to kind of that whole deal. So no, you know, I continue to be a relentless buyer for this entire year, and that's just kind of is what it is. I continue to take advantage of the deals that are given out there. Hope you guys enjoyed this video. As always, if you're looking to join my private stock group, check out the pinned comment down there to get access to everything we have in there, including the Discord chat. If you're looking to talk with fellow Palantir shareholders, Tesla shareholders, AMD, NVIDIA, all those sorts of stocks, the chef, you can come talk with us, okay? You know, inside the Discord chat, as well as get access to our weekly private group investors report and all the course curriculums that will be pinned comment down there. What the heck is going on with my shirt? Anyways, I'll be tripping. Much love as always, and have a great day.